Hello dear friends. Before we begin our broadcast, I kindly request that you share your thoughts on the different strategies I have tried to present to you so far in the comments section. If you have a favorite strategy that you've learned from the previous broadcasts, please mention it as well. This way, I can work on creating content that will contribute more to your profits by building upon the foundation of that strategy with different variations. Without further ado, let's move on to the training in this video. In this broadcast, we will focus on moving average indicators, which are commonly used by a significant portion of traders in market trading. Of course, there are many different versions of moving averages. Simple moving average (SMA), exponential moving average (EMA), and volume-weighted moving average are among the most frequently used ones. Additionally, there are very successful moving average lines developed with different parameters. Tillson T3 and Mavelime W indicators, written by Kivanchas Bilgic, are just two of them. In this video, we will also learn how to generate profit with the Tillson T3 indicator. Let's get started. Now, let's first take a look at how our probability of profit might increase when we trade using two SMAs with 200 optimized parameters. Please note that I'm saying probability because there is no such thing as 100% success in any strategy. We are striving to increase our chances of profit by learning technical analysis and applying it correctly. Let's analyze the euro to US dollar on a 2-hour time frame chart. As you can see here, the price is trading above both moving average lines. However, if you look closely, in the area where the peak level is reached, we see a horizontal movement. This indicates a decrease in the strength of the uptrend and a hesitancy among buyers. The price has dropped below both moving average lines, and we see a closing red candlestick. It might be a mistake to immediately assume that this is the beginning of a downtrend, as after a prolonged uptrend, such a move could be a false move in the markets, referred to as a bear trap. How can we protect ourselves and take precautions against this possibility? When we look at the price action, we can see a slight retracement towards the moving average line. This is interpreted by professionals as a sign that a new, strengthening trend is likely to emerge. Therefore, we draw a new support line at the recent low and await its confirmation through volume indicators. If our expectation is met, it is highly likely that our conviction about the onset of a downtrend will strengthen, and we will enter a short position to attempt to profit. Our expectation is met as we observe a doji candlestick. Not only did our drawn support line break to the downside, but the volume indicator confirmed this break with a high volume yellow column. A favorable setup has emerged for us to attempt to profit by opening a short position. I will attempt the trade with a 1:2 risk-reward ratio. Of course, a 1:1.5 ratio is also acceptable. The preference here is up to the trader's risk preference. And just as we accurately predicted, a clear downtrend has formed, and sellers have made their presence felt in the market. As a result of our correct analysis made at the beginning of the trend, we have achieved a nice profit. Please remember that the only and irreplaceable way to determine how much a financial asset will gain or lose in the future is to have knowledge of technical analysis. Technical analysis knowledge may not bring profit in every trade, but with a strong education, it is a clear fact that it will bring more profit to your capital than losses. Before moving on to our next example, let's not forget to subscribe to the channel and like the videos. Let's also look at an example of a long position using the same moving average lines. We can see that the green candlestick closed above both moving average lines. Of course, this appearance is not sufficient for us to make a purchase. We need to wait for a price retracement to create a new high. Yes, the retracement we expected has occurred in a short time. Now, we draw a resistance line at this new high and wait for it to break to the upside. If this happens, we will check the formation of yellow or red columns in the volume indicator. Here, the green candlestick, confirmed by the yellow column in the volume indicator, has passed above the resistance line. The upper part of this candlestick has a wick that is the same length as the body. The meaning of this wick is that buyers pushed the price up until the opening of this 2-hour candle, and before the closing time, sellers also pushed the price down by about half of the rise. Professional traders who pay attention to this detail may wait for the next candlestick, but traders who simply adhere to the strategy and don't focus on this detail can enter a long position. Nevertheless, we opened the trade in line with the strategy we have learned so far, and once again, we managed to secure a very nice profit with a 1:2 ratio. Now, let's change our strategy by using 3 different parameter moving average lines. Please optimize the moving average lines as shown on the screen, but this time, we should adjust all the moving average lines based on candlestick closures. Now, the 200 SMA line that we will use in this trading model will show us the overall market trend direction. The 50 and 13 parameter EMA lines will also assist us in finding suitable entry points for our trades. According to the price action, the fastest moving average line with a 13 parameter setting has crossed below the 200 SMA line, but the 50 parameter EMA line is still above the 200 SMA line. And we can see that the 50 EMA line has also crossed below the 200 SMA line. Thus, the likelihood of the beginning of a downtrend increases, and as always, we take precautions against the possibility of this view being a false signal by drawing a support line at the lower level that has formed, and we continue to monitor the price action. As you can see, the group of buyers in the market is exerting stronger upward pressure after the initial retracement, but they are unable to surpass the 200 SMA line. We are drawing a new support line at the lower level that has formed. The support line we drew was broken by a large red candlestick, but the volume indicator is not showing yellow or red columns. Therefore, it would be prudent to wait before opening a trade. After the large red candlestick, a doji candlestick has formed. The volume spread analysis indicator shows high volume with a yellow column, but the doji candlestick is a sign of indecision. It has wicks of equal length on both sides and a very thin body in the middle, indicating the indecision between buyers and sellers in the market. We should wait for a more reliable formation before opening a trade. The next candlestick was also not confirmed by the volume spread analysis indicator. We are waiting. Now, I want you to pay attention to this candlestick because it's a pin bar with a long wick at the top. Despite its green color, this pin bar shows a time frame where sellers dominated, and the volume indicator, with a yellow high volume column, confirms the downward pressure from the sellers. A trade can be opened with the closing of this pin bar. If you didn't fully understand this detail, please write your questions in the comments section. The result of a flawless analysis brought in a great profit. Now, let's analyze a suitable example for a long position in the same strategy model. Let's see what the result will be. We can see that the 13 parameter moving average line has crossed above the 200 parameter SMA line, which indicates the general trend direction, but we still see the 50 parameter moving average line below the 200 SMA line. Now we've seen that the 50 EMA line has also crossed above the 200 SMA line. This time, let's try to open a long position trade directly without drawing any resistance line and see what the result will be. Although we tried this trade with a 1:2 ratio, placing the stop-loss level below the 200 SMA line, the trade got stopped out despite the price achieving approximately a 1:1 profit ratio. As you can see, it's never guaranteed that every trade in the stock market will end in profit. Now, let's add another important and popular moving average indicator, the Tillson T3 indicator, to our chart. This indicator, created by Tillson and made more effective by Kivanchas Bilgic, is believed to be more sensitive than traditional moving average indicators. The price is trading below the Tillson T3 moving average line, but it is still maintaining its blue color. In order to enter a short position trade, we first need the line to turn red. We can see that after a few candlesticks, the line has turned red. Now, we can consider the possibility of the beginning of a downtrend, but we still need additional confirmation to open a trade. After the Tillson T3 line turned red, as always, we drew a support line to ensure the existence of a downtrend and observed that this line was broken. At the same time, the volume spread analysis indicator also confirmed the downtrend with a yellow column. The conditions for a short position trade have been met. Here, we can see the assistance of the Tillson T3 indicator, which not only clears our chart from clutter with multiple lines but also creates an excellent dynamic support resistance line. Let's quickly look at an example of a long position, but also consider the differences in the target for this trade. As you can see here, in order to enter a long trade, the Tillson T3 line needs to be blue first. Then, we draw a resistance line at the peak level that has formed, and open a trade upon its break. Let's evaluate it based on 1, 2 target or 1.5 targets. Despite the price coming quite close to the 1-2 risk-reward ratio, there was a downward turn. Those aiming for a 1.5 profit level were able to close their trades profitably, but it wasn't a successful trade for those waiting for 1-2. Friends, if you have any questions related to the strategies in this video, please write them in the comments section. Don't forget to subscribe and hit the like button. Goodbye.